Welcome to our 2020 Online Personal Finance Institute, where teachers learn content and experience resources available for teaching the personal finance portion of the high school economics and personal finance course. Today, our personal finance topic is insurance. I am your host, Rebecca Booth, Director of the Center for Economic Education at the University of Lynchburg, and with me today is George Lyle. George is retired from the State Corporation Commission's Bureau of Insurance. He retired in February of 2019 after 38 years, having worked in the Property and Casualty Consumer Services and Market Conduct sections. He also served as the P&C Division's Outreach Coordinator and finished his career as a Division Assistant Deputy Commissioner. In retirement, he has continued to represent the Bureau at various education programs and events. George, thank you for being with us today.
Thank you, Becky. It's good to be here.
To start out, I'd like to ask you, why did you choose a career in insurance?
Well, that's an interesting start. I was a small town boy from Southside Virginia and looking to stay in Southside Virginia, and the textile factories were slowing down, and my father wasn't a farmer, so there was that work wasn't available. But I did have a friend whose father ran an insurance agency in the town I was from, and I thought that that might be an opportunity to learn that. So I did some work there during the summers, and while I was in school, I actually majored in finance and insurance at Virginia Tech. I don't think they have that major anymore. It's a finance major, but not in the insurance component. So I enjoyed that work. I found out after a couple of years that I did not enjoy selling, and to make money in an insurance agency, you needed to sell. So I looked for some jobs in the insurance industry around. Richmond certainly was a big job base then, and of course State Farm was in Charlottesville, and Nationwide was in Lynchburg in those days, and there were a lot of jobs around. But I've kind of stumbled across an ad for a position at the State Corporation Commission as a trainee, and I qualified for that and got that job, and that's when I started my career with the Bureau in 1980.
Great. And so it really seems like anyone can buy insurance for virtually about anything. So name something that has surprised you that someone has purchased insurance for.
Well, it really has changed a lot over the years. I mean, when I came into the business, it was auto and homeowners and basic insurance on businesses and things. Of course, over the last few years, cyber liability has become a big issue. I mean, none of this is really surprising. Travel insurance is a big thing now with so many people taking trips, and they're so expensive. Pet insurance, the way we treat our animals. I was a country boy. We didn't give our dogs and cats quite as much attention as urban folks do who live with them in the house all the time. So pet insurance is a big deal. I think the thing that surprises me sometimes is just kind of a lack of understanding. I'll go to Lowe's or Home Depot or any one of the big box stores, and I'll buy a $20 tool, and they'll offer me insurance for $7 for insurance. Well, that's a third of the cost of a $20 tool. And so I think it's interesting that, people buy that coverage. By the time my tool broke, I'm sure I wouldn't remember that I had insurance and wouldn't file a claim anyway. So it's that's a one that it kind of surprises me that people buy. But you can insure, if there's a risk and there's a loss, a possibility, the insurance industry responds to it.
Excellent. Very good. Well, today we are going to, during this interview, focus on automobile insurance and then also move into property and liability insurance. So we will start with our automobile insurance section. And so a question to start with, do lenders require that we have auto insurance?
Lenders are concerned, obviously, about the car itself. They don't care about the liability portion. They want you to protect the property that they've loaned money and that they've got a lien on. So they are looking for you to purchase collision coverage, which provides protection on the car. If you were to hit a tree, or if you hit a building, or you hit another car, guardrail, that's going to be covered by your collision coverage. There's another coverage called other than collision. It used to be called comprehensive, but now it's actually the technical name, the legal name is other than collision. And that covers things like glass breakage for windshields that can be, now costing the thousands of dollars to replace. Um, Fire, theft are covered by other than collision. And a big one in Virginia, almost any time of year, but certainly in spring, or collision with an animal, with a deer. Those are damages that are caused, that are covered by the other than collision coverage on the policy. So the lender is interested in that. The Commonwealth of Virginia is interested in the liability coverage. They want you to have the resources necessary to pay for damage that you cause, whether it be to guardrails and houses that you might hit, or other people. Obviously, bodily injury. When you injure somebody in an accident, the Commonwealth is more concerned with you having that coverage. So the state of Virginia, while it is not required to have a liability insurance, you can, in fact, whenever you get your registration card, you can check a box that says, yes, I have liability insurance, or no, I don't, and you can pay a $500 fee to DMV to be legally uninsured. We have illegal uninsureds, people who don't have insurance who should, and we have legal uninsureds, people who pay this fee. The fee gets you nothing. It gets you no protection. It gives you no coverage for anything. If you were to hit somebody, you're still responsible. And if you were to pay those damages that you caused, everybody's happy. The state's happy. Nobody's going to have a problem. If you don't pay those damages, one of the things the state will do is they'll take away your driver's license until you do pay those damages. So, that's always been a concern of mine for people who want to legally drive uninsured. I would certainly encourage you to, take the $500 and buy as much coverage. Buy as, use that to pay for as much coverage as you can, so that you have some coverage. Because most accidents, minimum coverage in Virginia, maybe we'll talk about this later, but right now, minimum coverage in Virginia is $25,000 per person bodily injury, $50,000 per accident, and $20,000 for property damage that you would cause. Most claims occur under those limits. Not all. There's certainly a lot of cars that are worth more than $50,000 that you could hit and damage. And certainly medical bills, you could certainly spend a lot more than $25,000 if you were to injure somebody. But a large majority of claims do come under those limits. So by purchasing at least the minimum limits, you've got a lot of coverage, and you'll have a lot of protection there.
Sounds great. Excellent. And I appreciate you mentioning those limits that are required in Virginia. How could someone reduce the cost of their auto insurance?
Well, a simplistic answer is never have accidents and never have convictions. Convictions may be a little bit easier. And particularly when I talk to high school students, stop at the stop sign. Don't roll through it, no matter how clear the intersection, no matter how many times. I live on a 4-way intersection here in Richmond, Virginia, and I can sit on my porch, and the number of people who don't stop far outweigh the number of people who do. Now, it is a residential neighborhood, so most people aren't going but so fast. But if a police officer catches you and tickets you, then that's going to be a surcharge on your policy. That's going to include that. Not having accidents is a little bit more difficult, but paying attention, again, for youthful drivers, paying attention to what you're doing. It is new to you. I know kids feel this invincibility, and they're smart, and they're quick, and they can drive. But all of us the teachers and the rest of us of our age, know how dangerous it is out there, and how many close calls we've had over the years of whether or not we let it go into a ditch, or we hit somebody else, or somebody ran out in front of us and we almost hit them. So I think those are certainly the most important things. Then you talk about reducing coverages. If you have an older car, do I need collision coverage? I no longer have a lien holder. We just talked about what the lien holder will require. I no longer have a lien holder. Maybe I'm in a position where it's a $5,000 car. If I were to destroy it, I could handle that loss. I might not like it. I mean, none of us like to lose $5,000, but we could reduce the premium that way. A lot of people will remove the collision coverage and keep the other than collision coverage for the windshield and the animal accident and things like that. So that's one way of doing that. Saving money on liability insurance is more difficult. As we get older, as we acquire more assets, as we have more to lose, you really want to keep those limits higher and higher, because that protects you and your assets. So reducing liability limits, while you can save money, is not something that you want to do. We tend to increase those limits over the years as we become more and more financially stable, and we have more and more money we have more and more assets to protect. So that's why, and of course I guess the easiest way, and what we hear on television all the time, is you shop around. Mm-hmm. Insurance companies all have different rating plans now. I mean, I think when I came into the business, there was basically one way to rate a policy, and all companies follow those rates. And but now it's open competition. The good thing about auto insurance, or in purchasing that coverage, is you're all purchasing the same policy. It's called a personal auto policy, the PAP, with capital letters, personal auto policy. So if you buy that from ABC Insurance Company, you're getting the same policy you're getting from XYZ Insurance Company, as long as you have the same coverages and the same limits and the same deductibles. So you really can comparison shop very easily from that perspective. And of course, the internet has made it really easy to shop for lots and lots of coverages, but companies are becoming more and more innovative on setting rates and setting premiums for these coverages. And to be honest, if a company has a bad year and they have a lot of losses, they're insured to have losses, then they're going to probably have to have a rate increase, and they will pass that on to the consumers. Even if you, as a good driver, have never had an accident, you're going to share in those losses. So by shopping around, and I'm not one who likes to shop often, but every once in a while you have to make sure, has my company really gotten out of whack with what is the price for somebody in my situation? Now, if I've got speeding tickets and accidents and my company's kind of stayed the same, I might stay quiet and just stay with them, because you're probably not going to save a lot of money. But shopping around certainly is, and that's why State Farm and Geico and Nationwide and Liberty Mutual, all those companies spend so much money on advertising, because they know that, they often, some of them refer, save 15%. Well, only the people who move save 15%. I mean, everybody's not going to save 15% if you get a quote from a certain insurance company, but you do need to shop and make sure you're getting a competitive price.
Sounds good. And so I think you've really kind of touched a little bit on my next question, but when and why do consumers normally terminate collision coverage?
Well, again, I think it needs to be a personal decision based on your financial situation. Mm-hmm. As soon as your lien is paid off, you have the right to do that. You get your title back. It's your car. If you destroy it running into a tree, nobody cares but you. The bank's no longer in the picture. A lot of people make that decision at that point in time. They want to save that premium, and maybe you save $200 a month, or a year, or whatever your premium would be, and that's a good thing. Mm-hmm. Can you afford that? Do you have the money? If you lose a $10,000 car or a $20,000 car, do you have the money to replace it, or would you rather pay I think I've heard insurance explained as you have a known loss to protect you against an unknown loss. My known loss of money, I'm giving up X number of dollars in premium every month, or every 6 months, or every year, depending on your policy. I'm giving that away to the insurance company, but I'm protecting myself against an unknown loss. I might go 20 years and never have a collision claim, but I could have one the next day. And I've had consumers over the years who've said, can I do anything? I had insurance on this car for 5 years. I paid every time. I decided to take it off, and 3 days later, I had an accident, and I went back to the company and wanted to add it back on, and they said no. Well, They said, no, you took the coverage off. They're not going to go back and pay for that loss after you took the coverage off. Had you kept the coverage, obviously they would pay that. So you've got to be able to deal with that. And for some students that you're probably dealing with, if they've got their own car and they've got their own insurance and they've got their job after school or during the summer, their $1,000 car may be as difficult to replace as somebody else's $20,000 car. So
Right.
they may be better off paying an extra $10 a month to give them something. And of course, they're going to have a deductible. Let's say it is really a $1,000 car and they've got a $500 deductible. Well, if they total the car, then they've got $500 to go and deal with that. Another thing for us, I think for the teachers listening, maybe more so than the students, it also gives me an insurance company to handle that car. I've now totaled a car. Let's say I'm on vacation in Georgia and I total my car. If I don't have collision coverage on it, I've got to handle all that. I've got to deal with all that. If I've got collision coverage, I can call up my insurance company and say, hey, I've had an accident. My car's in Georgia with me, where we just had this accident. And they'll take care of the salvage. They'll deal with the loss. They'll come get the car. They'll pay for those expenses. So I think that's not an insignificant thing for many of us. If we have the resources to do it, we pay for that convenience. Again, after 15 years, 30 years, we've never used it. You think, gosh, I threw away all that money. But again, it's a known loss that I can handle to protect me against an unknown loss that maybe I'm not in as good a position to handle. So that's one reason to keep it. But certainly, we want to get rid of coverage. We want to keep it as low as we can. We want to keep the premium as low as we can. But we also, you get what you pay for. And if you have if you have limits, if you have no coverage, you have no help. If you have minimum limits on liability, then ultimately they're going to pay their $25,000 and you're going to deal with the rest of that loss.
Right. Yep. Always a risk. For sure.
Yes.
And one last question in automobile insurance, and then we'll move to property and liability. And we've talked a little bit about this, but what is the difference between collision? And we know it's not really called comprehensive anymore, but other than collision. So is there anything else you would like to talk about the difference between?
Well, just to know that they are two separate coverages. Well, they don't overlap. So if you give up one, most companies that I'm familiar with don't write collision without other than collision. So you can keep the comprehensive or the other than collision. And again, that covers your glass breakage, your fire, your theft, your windstorm. I mean, if a tree blows down on it, that's covered under other than collision coverage. And again, the big one is either windshield. Again, some of these windshields have got the antennas. They've got all kind of equipment in them now that might cost you. So that's there for glass breakage. And then, of course, the animal collision. So, that's the one most people will keep if they give up the other collision, because I don't want to call it acts of God, but that's kind of, sometimes you can't help it. A windstorm blows a tree limb on top of your car. That's not your fault. Most people probably feel like, okay, I've got a little bit more control over if I hit something. I'm driving the car, that's going to be on me if I hit it. Now, of course, somebody hits you, then and maybe they don't have the proper coverage. You may wish you had collision, because that's not going to be covered under other than collision. It's just one of those things. Can you suffer that loss?
Right.
And I don't mean by having all the money in the bank. I just mean by, do you have the ability to go buy another car and replace it? Because most of us in Virginia need our cars for transportation. I always, when I go to high schools, and I realize that for most folks, the way you get to school is by car. There are certainly some more in Richmond and in more urban our cities that have bus lines that you can get to, but the chance of a teacher or a student living on a bus line that actually goes by their school, other than that little yellow school bus, is pretty remote. So most of us need our cars to function in most of Virginia.
Exactly. Okay. Well, thank you. And now we're going to transition into the property and liability insurance.
Okay.
And we'll start with talking about renter's insurance. So what is really covered under most renter's insurance policies?
Okay, well, I think when the industry developed the renter's policy, I mean, if you go back far enough, you bought fire insurance to cover a specific thing, and then you added windstorm and you added hail. Well, at some point in time, I think in the 40s and 50s, the insurance industry started packaging these things together, saying we can sell a package policy with a lot of different coverages cheaper than we can build each individual policy. So we're going to come up with a homeowner's policy. And from the homeowner's policy, they said, well, you know, everybody doesn't own their home. So this isn't we need to come up with a tenant homeowner's policy or renter's policy. And what they did is they basically took the coverage for the dwelling, the house, the structure, and other structures like the garage, they call them appurtenant structures or other structures. They took that off the renter's policy. So renter's policy starts with a tenant homeowner's policy starts with contents on the coverage. Coverage on the contents, excuse me. So you choose whatever amount of contents you have. If you're an apartment dweller, if you're renting a house, you're going to tell your insurance agent, okay, I've got $30,000 worth of contents or $50,000 worth of contents. And with that, that's where the policy starts. There's also a coverage for loss of use or additional living expense that goes with that. Let's say you have a fire in the apartment complex that you're in or in the house that you're renting. You might very well have to go rent another apartment on a short-term basis that may cost you more than the rent that you're paying. So there is coverage that you can purchase that would provide some of the protection for those additional costs. And the real difference that came about when they made this package policy is they also brought the liability coverage in. You know, we have to have liability coverage on our car when we drive because we can injure somebody. But as a property owner or as a tenant, we control certain spaces that we live in, and things can happen there that we can be responsible for from a liability standpoint. I mean, when we're driving a car, it's pretty clear. If we hit somebody, we're liable because we're driving a car. But if we're at home, somebody comes into my apartment, my rented house, and falls over a cord or a torn carpet or something where I'm responsible. Or if I have a dog and a dog's in the yard, even if it's fenced in, you know, the dog bites somebody. Well, I might be held responsible. I might not be liable. And there's a big difference between being liable and having to deal with that claim. My dog bites you, Becky, and you have injuries and you need assistance there, and you sue me. Well, maybe you were at fault. You reached over my fence. You're an adult. You reached over my fence. You mess with my dog, and my dog bit you on the hand. But you still sue me. So I need the legal defense, and that's a very important part of the liability coverage, both for auto and for homeowners policy, tenant homeowners policy, is that my insurance company is going to defend me, and they're going to hire a lawyer, and they're going to go to court with me, and they're going to explain to the judge why I shouldn't be responsible for your damages. If we win, that's great. The legal bill gets paid by the insurance company. If not, if the other party wins, then my insurance company is going to pay up to the limit of coverage that I purchased. So it can be a pretty important thing. And again, we're all talking about protecting our assets. What can I afford to lose? Can I afford to pay? Maybe, I always give the example when I teach classes to teachers, particularly. Your dog bites an old guy like me on the leg, and puts a 6-inch scar, and that's bad, but I'll survive, and we stitch it up. You bite my 3-year-old granddaughter on the face with a 6-inch scar, you're talking about tens, if not hundreds of thousands of dollars of surgery to repair those damages. And I'm the owner of the dog. It's my dog. It was my fault. I'm going to be responsible. So those are the types of claims that you deal with there that are actually in some ways much more important than the property coverage. I'm an apartment guy, and I've got $5,000 worth of furniture in it, and it burns down. Well, I've lost $5,000, and that's bad, but it's not $100,000 for an injury that I've caused that I'm responsible for. So the liability can be a significant part of it. It's certainly much smaller claim wise as far as numbers go, but as far as devastation goes, property is limited to whatever value the property is. Liability, to some degree, can be unlimited.
Right. Okay. Another quick question. being mindful of our time. So a student going off to college, would they necessarily need renter's insurance for their dorm? If they were in an apartment, definitely I would recommend, but how about a dorm? Would they need that?
A dorm, you've got some of your personal property coverage follows you around the world. So as
Mhm.
as an insured under if their parents have a homeowner's policy or a renter's policy, they've got a certain amount of personal property that follows them where they go. They would certainly want to talk to their insurance agent to make sure that there's an appropriate amount of coverage there. But that's true, and you're right about apartments. I think for most apartments, the folks that I'm familiar with that have rented apartments in college communities recently, their landlords require them to have renter's insurance. Again, they're not as concerned about the stuff that's in the apartment. They're concerned about that liability. Their tenant starts a fire in the kitchen, and 5 other people or have to be evacuated, and their apartments are destroyed. There needs to be some money there to recover. So uh, the reality is, I think most folks that have nice apartment complexes are going to require you to have that coverage. If you're living in a substandard situation, then they might not care, but you're still responsible. So you would do it, and your liability is not going to follow you the same way the contents would. So I think it's a much safer thing to go ahead and get that policy. And you're usually talking a few dollars a month. You're not talking a huge premium.
Okay, and then I have two last questions. So the next
Okay.
one, what is the difference between a cash value and a replacement value?
Okay, most everything we buy depreciates. It starts to wear out immediately. Certainly televisions and clothes and most furniture. There's certain things that don't. Jewelry and other things like that might appreciate in value and become more valuable over time. But most things do depreciate. And the homeowner's policy and the renter's policy, unendorsed without a change, pays for contents, personal property on a actual cash value basis. So things wear out. For an additional premium, you can change that coverage to replacement cost. And then you will get new for old. You will get the price of a new pair of sneakers or new clothes and new laptop and new things. All that will be new. On the homeowner's policy, where we cover our own owner-occupied dwellings, our house is covered for replacement costs. The dwelling itself, the home, is covered for replacement costs, but the contents is not, unless you buy that coverage separately. And again, that's usually well worth it. I know a lot of insurance agents and some insurance companies that won't sell it to you unless you do buy it separately. I mean, you do increase it because they just don't want to deal with a consumer who's had a devastating fire and have been told, okay, you get 15 cents on the dollar for your stuff because it's all, most of it's been worn out. You've had it for a while. I mean, I know as we live in our houses, we get furniture that was brand new 15 years ago. Well, now it's a 15-year-old sofa,
Mm-hmm.
and they're going to pay me what a 15-year-old sofa is worth, which is not going to not replace my property adequately. And of course, the bigger the house, the bigger the chance of a loss that could be devastating. So that's the difference. Replacement costs will buy you new. Now, sometimes people get upset because televisions, for one, okay, I could buy you that same television for 50% less than you paid for it 2 years ago because the cost of the television's gone down.
Right.
You don't always get the newest thing. You get what you had. Same thing maybe with computers. It's getting you the size computer that you had 3 years ago might actually cost less, but you get the new computer. So,
Right.
you really can't complain. You might not get the newest thing, but you will get the replacement cost for
That's
it.
great.
Okay.
And in our last question, what is an umbrella policy?
An umbrella policy is a liability policy, only provides liability coverage, but it goes over top of an umbrella of all the other policies that you have. So if you have an automobile policy, maybe you buy $300,000 worth of limits there, and you've got a homeowner's policy and you've got liability coverage on that, and you've got a boat and you've got $300,000. Well, you might buy $1 million or a $2 million liability policy, umbrella policy that goes over all of those to protect you against that huge liability loss that you could suffer. Again, property losses are limited to whatever the property's worth. So we kind of know that. but liability losses can be, did I just cause you a small injury, or did I devastate your life and really put you in medical treatment for the rest of your life? So, and again, to some extent, it's how much do we have to lose? Not to be trite about it, but if you don't have anything, if you really don't own anything and you don't have any prospects of owning anything, then how much liability coverage do you need? The person who you hit needs to be aware of that. I mean, you and I, as professionals, we buy life insurance, we buy health insurance, we buy things to protect us. We buy coverage on our stuff to protect us, regardless of how we're injured or damaged. Somebody who doesn't have anything is going to have a lot less reason to buy that coverage. But as you acquire more things, you have more to lose. And certainly, think about LeBron James. What does LeBron's umbrella policy look like? He's got tens of millions of dollars worth of assets, if not hundreds of millions of dollars to lose. So he needs coverages different than a state employee or public school teacher probably needs. Yeah, we'd like to cover everything, but the fact is, there is a limit to how much somebody can take from us. So again, you have to prove it. But again, as you get more things, if you own that boat and you own the motorcycle and you own the house and you own the cars, then you probably have enough to lose that, hey, I might need an umbrella policy. And the premium is usually fairly low. And by low, I mean, a couple $100, because so few claims ever get to that point. Most of the claims, if you have $300,000, and then they're not going to sell you a liability policy if you only buy $25,000 worth of coverage. They're going to make you buy $300,000, $500,000 on your it's referred to as the underlying policies, the homeowners, the auto, the boat, the motorcycle. They're going to make you buy a good size limit there, and then they're going to sell you this $1 million or $2 million, $5 million on top of that, because they know most claims, 99% of the claims are going to come under those limits. Long answer for a very short question. Sorry about that.
That is okay. No, it's appreciated. And so to wrap up today, do you have any closing thoughts for our personal finance educators out there? What's a guiding piece of insurance advice that's really helped you stay focused on your personal finances?
Well, I think it's just always looking for changes in my life, things that have been, things that I bring into my life that I purchased and like that. Those are the things you have to keep up with. I go ahead and buy a car. Now, if you go to most dealerships, they're not going to let you walk out of the door without talking to your insurance agent. And in the world that's different now is they can do that 24 hours a day. And when I came into the business, it was a 9-to-5 business. And if you went to a dealership after 5, you probably didn't get your car until the next day because they wanted to talk to somebody later. But you can call most insurance companies 24 hours a day, even if you're not dealing with your agent. So that's a big thing. I would like to say, Becky, that I really appreciate this course and what these teachers are trying to teach, and I want to encourage the insurance side of it. Obviously, that's where I'm coming from. I know the stock market game is sexy and neat, and how we're going to make all that money. But your kids are, as I think you'll find in our own lives as teachers and again state employees and such, that we're going to spend a lot of money every month on insurance. And the more they know about it, the better they will make those decisions. They're going to buy that health insurance, hopefully usually through an employer. They're going to need life insurance as their circumstances change and they have more responsibilities that they want to protect. If you have that car, you're going to need that. If all of us are going to be living somewhere, whether it be a home or a rental situation. So all of those dollars are going to go out every month, and to let those go out the door without thinking about it, just because, hey, I set up my auto policy 30 years ago and I haven't thought about it since. The money just goes out the door every day. How much have you overpaid? So it's certainly a way of saving money, keeping coverage appropriate, and providing you and your family with the protection that you need. So we do at the Bureau really appreciate the work that these personal finance teachers bring to that part of it, and hope that insurance can be an interesting part of their curriculum for their students.
Excellent. Well, George, thank you very much for joining us today. And also, I want to thank all of our educators that are viewing this video, and we really appreciate what you do. Thank you, George, for being here with us.
Thanks so much. Enjoyed it. Bye-bye.
Bye.